Bitcoin ISM. So you can see this, the ISM above 50, which is where we've just started here. That is when we get the acceleration phase, the banana zone. What I have been saying for a long time now is the strength of the dollar. This is the dollar inverted in pink. The strength of the dollar after Trump got elected leads by 2 months the economy and financial conditions. As Trump was clearly going to start winning, the dollar started rallying. Oh my God, tariffs. Oh my God, whatever it was. And they started rallying the dollar, which is what happened in 2017. And what happens is it slows down global growth. The dollar is the most important input to all of global growth. And so the US Economic Surprises Index, the SESI, has been falling in line with this.
Former Goldman Sachs executive Raoul Pal says a Solana competitor is his favorite. He said that if he had to have a favorite, he would choose the Layer 1 channel SWI over Solana. He shared a chart comparing the price of SWI USD to Solana USD, showing SWI USD poised to break above resistance. He's not the only analyst bullish on the Solana competitor. Crypto trader Michael van de Poppe also said that SWI is increasingly being adopted as a decentralized finance network, particularly for Bitcoin staking and lending, known as Bitcoin DeFi. Once markets start rising again, capital will flow back to those that have shown signs of strength. SWI is one of them. This is a great place to learn about SWI. According to Raoul Pal, the biggest move is coming for Bitcoin and Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
The percentage of stocks trading with a RSI of less than 30 is almost record territory. And guess what? Global M2, because the everything code drives everything, drives NASDAQ too. And you guys trying to sell the NASDAQ here are selling something that is perfectly priced for liquidity. And we've had these liquidity air pockets in the past. Liquidity air pocket is when liquidity is not rising, NASDAQ overshoots, it recorrects, comes back down to trend, and then follows liquidity. Remember, NASDAQ has a 97.5% correlation to global total liquidity, which is the index that we use on a broader basis. 97.5%. Bitcoin has an 89% correlation with global liquidity. Global liquidity, I wrote about this in GMI, and there's probably not much time to talk about it now, but is my preferred measure these days. If we go back to the early phase of the everything code, the balance sheet was the main thing. After the balance sheet use, we started using Fed net liquidity. Once people understood that the balance sheet was printing of money and debasement, they started moving to Fed net liquidity. Now, all of FinTwit understands Fed net liquidity, as does crypto Twitter. And so they're looking at the TGA and the reverse repo and all of this stuff. Meanwhile, the game has moved. The game is always moving, my friends. The game has moved to total liquidity.
Competition among blockchain networks is intensifying, with projects vying for dominance in the burgeoning decentralized application and DeFi market. While Solana has garnered significant interest in recent years for its speed and scalability, the rapid rise of SWI suggests there is room for several major players in the market. SWI, which launched its mainnet in 2022, is a Layer 1 blockchain designed to address some of the biggest challenges facing existing networks like Solana. One of its key features is its innovative approach to consensus mechanisms, which aims to improve scalability and transaction throughput without compromising security or decentralization. This makes SWI an attractive option for developers looking to build decentralized applications, especially in the rapidly growing DeFi sector. Despite its relative newness to the market, SWI has already generated significant interest from developers and investors. Its native token SWI has seen impressive price growth, and its DeFi ecosystem is rapidly gaining traction with numerous applications focused on lending, staking, and decentralized exchange platforms. As the cryptocurrency market continues to evolve, many analysts are closely monitoring SWI's trajectory. Although the project is still in its early stages, its performance in the DeFi sector, combined with the enthusiasm expressed by industry experts such as Raoul Pal and Michael van de Poppe, suggests that Sui could be one of the next big success stories in the cryptocurrency space. For those looking for an asset with high growth potential, Sui's strong fundamentals and rapid DeFi adoption make it a promising investment. With the increasing influx of users and developers to the platform, future price appreciation seems likely, especially if Sui manages to maintain its momentum and break through key resistance levels. As always, potential investors should be cautious and conduct their own research, as the cryptocurrency market remains highly volatile. However, thanks to his innovative approach and promising early results, Sui has undoubtedly earned his place as a rising star in the blockchain world. Paul predicts a sharp rise in Bitcoin over the next 12 months amid a weakening U.S. dollar and growing global liquidity. Paul, now CEO of Real Vision, said that policymakers around the world are likely intentionally weakening the dollar to make it easier for countries to pay off their debts. According to him, this move will lead to a sharp increase in the money supply, which has historically fueled the rise of risky assets like Bitcoin and cryptocurrencies. Everyone needs and wants a weaker dollar to pay off their dollar debts. No one wants it to advance too quickly, but it needs to come down over the next 12 months. He highlighted the close link between global liquidity and the price of Bitcoin, citing an 87% correlation. Paul also discussed 2020, when a recession and a wave of stimulus measures led to a historic surge in cryptocurrencies. Paul shared a chart showing Bitcoin's tendency to follow global liquidity trends with a lag of about 12 weeks. This factor may be more important than any other. Paul believes Bitcoin will rally in the coming months thanks to a weakening U.S. dollar. He believes policymakers will methodically depreciate the U.S. dollar to manage debt repayments. According to Paul, dollar depreciation will lead to a sharp increase in the global money supply and benefit risk-on assets like Bitcoin and cryptocurrencies. Everyone needs and wants a weaker dollar to pay off their dollar debts. No one wants it to move too fast. It would explode the value at risk, but it needs to fall over the next 12 months. As Bitcoin experiences its worst quarterly close in history, Paul doesn't rely on traditional candlestick charts or technical indicators. He relies on the global money supply, M2, a barometer of the liquidity circulating in the global economy. According to his analysis, Bitcoin would follow the fluctuations of this flow with a 10-week lag. However, since the end of 2024, the M2 curve has registered a notable rebound, and the conclusion is that Bitcoin's awakening is imminent. A relentless logic, but not universal, Julian Battelle, head of macroeconomic research at GMI, proposes a slightly different time horizon, 12 weeks. For him, Bitcoin's local bottom would be this week before a V-shaped recovery. Two visions, one scenario, the end of stagnation. When central banks flood the markets, some of that new money inevitably flows into cryptocurrencies, a phenomenon amplified by the growing adoption of Bitcoin, ETFs, discrete bridges between traditional finance and the cryptocurrency ecosystem.